Advisory firm Teneo releasing its annual vision survey, which features insights from over 750 global CEOs and institutional investors. Now, the consensus is that 2026 will be defined by steady global growth, expanding opportunities in APAC, and also, Romaine, a robust AI economy.
All right, well, let's get to someone who knows a lot about that. Paul Keary is the co-founder of Teneo and the CEO of the company's 5 business segments globally. Paul, let's go back to the start of this year, because you came in, certainly here in the United States, with a big change in administration and a lot of expectations about what that would mean for business and finance. Now, as we sit here, basically the last week or so of 2025, was this did it play out kind of how people expected?
Yeah, it's a great way to look at it, Romaine. You know, year over year, CEOs nailed it. On the likely increase of M&A, because it's 40% year over year, you've reported it here very well, that there will be reframing of the regulatory environment, which there has been, that capital access would be there for companies, quality companies that needed it. So all in all, the optimism has transpired in the ways that they expected. I think the issue that none of us were prepared for is just how complex and disruptive trade and tariffs would be. And that is probably the one, to borrow your phrase from your market wrap-up for the week, you know, that's upbeat, but they're some relative upbeat.
Is there any sense that a lot of CEOs and executives see that kind of smoothing out, meaning the uncertainty that we saw around, not even just trade policy, but really a lot of policies coming out of Washington? And it seems like, I don't want to be too presumptuous, but it seems like as we got towards the end of the year, it seems like people at least felt like they figured out the pace of what was coming out of the White House and they could adapt to it more. Is that fair?
I would say it's fair. I also think about it, I think CEOs have to become the chief disruption officers. From COVID, through war, through the most consequential new technology history, and then, you know, half the planet went to the polls last year, and we've had new governments in many of those countries. So CEOs have had to adapt and learn muscle memory and bring out new models. So I think they're stronger, more resilient, and more able to meet new challenges and disruption than ever before. So I don't think there's any sense that these challenges have gone away, but I think they're more robust management capability to deal with what may come.
Well, you say disruption in 2025, almost 2026. People think about AI, of course. That has been the dominant disruptive factor over the past several years. A bullet point from your survey is that 68% of CEOs are increasing investment in AI and AI spending. Increasing investment, but the return isn't necessarily guaranteed there. Yeah,
this is probably one of the more striking points, I think, when we dig into it. Not surprisingly, it's the largest spend item on the docket for next year for CEOs. And not surprisingly, investors support that. What is surprising is CEOs have more of a decadal long-term view on AI as a catalyst for business transformation. And I don't think investors are there yet. I think they're looking at ROI. I think next year, I think your show, I think the world is going to be looking at how have CEOs wrested the narrative back into how do enterprises change their business models, find new markets, expand their services, and not just for a hunt for efficiencies and effectiveness. And if you're going to transform your business, that takes years, it takes time. It's also, I think, relevant to the point that, surprisingly perhaps, most CEOs are going to hire more people in the first half of next year. And many of that is to hire talent in to avail of and meet the moment that AI presents. I don't think it's a long-term trend you could extrapolate, but it shows that I think that tension between investors and CEOs is real.
Yeah.
But you have to back the CEOs. They know how to build an enterprise through the cycle.
Well, it's really interesting. It reminds me of the conversation around some of the critiques of the quarterly earnings cycle, that basically it sort of prioritizes or places a premium on short-term thinking. But to your point, I mean, if you're trying to transform your business, in many cases, that takes years. And, you know, this AI spending conversation or conflict that seems to have risen, it feels like it neatly encapsulates that conversation.
Yeah, we've had this year perhaps of there's the AI and the CapEx AI economy and everything else. I think next year is going to be about everything else, which is how does that technology, how do those investments get harnessed into transforming businesses? And this year and last year was about how do you use this new transformative technology to derive efficiencies, effectiveness, cost out perhaps. You know, that if this year was about AI and the CapEx economy supporting that, next year will be about how the enterprises are transforming with AI as the catalyst.
I have a couple questions just on the policy front, particularly here in the United States, because we are going through another election year, a midterm election year that could actually have some huge ramifications for some of the policies that have already been implemented it, plus some of the proposals here. Do the CEOs, do they worry about that as much as they do sort of the presidential election cycle? I know it's just, individual Congress people and senators getting elected, but if in aggregate it can have an impact on policy, when do they start to pay attention?
I think CEOs today have the dashboard on a range of issues that probably historically they may not have had to have. Geopolitics, global regulation, sentiment around political changes, war, new technologies. There isn't an issue that I don't think that they're not ready for. And they haven't got a team of people modeling out the implications of option A, B, or C taken. As we sit here today, we still think that the Supreme Court will rule on the president's trade and tariffs. There's no company that we advise in our 40 locations around the world that isn't thinking through the range of options that might happen. You can extrapolate that out to elections next year, to elections in this country and overseas. So I think that chief disruption officer crown that the CEO wears is real, and it's here for good, I think, too.
Well, Paul, we started this conversation talking about the relative optimism, relative upbeatness that CEOs feel right now. How might that translate into the M&A landscape in 2026? It feels like we saw deal making come back a bit in 2025 finally, and you think if CEOs are feeling pretty good about the state of things, that they've got sorted through a lot of maybe some of the boogeymen of 2025, does that translate into increased deal making?
Yes, I think you've covered it very well here today over the last number of weeks. Across strategic commodities, across technology, across industrials. Our survey shows that people are loaded for bear in terms of maximizing M&A opportunities next year. And the second half of this year, I think, shows that has been the promise of M&A this year has transpired. So across the sector, capital doesn't seem to be a challenge for strong companies. Ambition is there, and this consequential moment of AI means that every industry, I think, is subject to rationalization, consolidation, or M&A.
Absolutely. Paul, great to get some time with you. Really appreciate you stopping by. That is Paul Keary. He is co-founder and CEO over at Teneo.